I know. Yes, traders, how are you doing? It's W.C.K, guys. This is our Thursday lesson with Tamam Brokerage Service. Yes, guys, welcome back from CPI. Those who traded with us are live on TBS handle. Thank you for being part of this. Today we are going to learn some things, do some analysis, do some breakdown on our CPI, how it was. We're going to do some breakdown on CPI. We are going to do some analysis, mostly on the dollar, doing analysis as we learn. Do technical analysis as we learn. Okay, so let me hope you guys are good. Let me first organize my screen here. Mm, okay, okay. So, moment, let me first organize my screen so that we don't get disturbed as we are doing our analysis. Okay, so uh, let me hope you guys are doing fine. Let me hope you are everything is good. So today we are going to focus mostly on the technical analysis. What is technical analysis? How do we approach it, and how we do some analysis? But we are not going to like to be learning, to be doing like to be learning the basics of technical analysis. We are going to be analyzing the charts, different charts. We're going to analyze different pairs together in line of learning. So let me hope you guys you pick something. So uh, we all know that the main currency which moves the forex market, or which moves the global economy, it is the US dollar. So today we are going to be playing around the DXY and seeing some approaches. So as a trader, let's say you want to start trading. Let's say you want to start your technical analysis. What are the things you should be focusing on? Okay, so there are always a few things. We always focus on our entry. Okay, we focus on our entry and also the exit level. Okay, entry and exit. We always focus on our entry and exit. Then we also, after focusing exit and entry and exit, then you will also focus on, because this market is being moved with buyers and sellers. Okay, so knowing the position of buyers and sellers will help you know when to enter and when to exit. Remember, for us, we forex traders, remember, let me make this a little bit bigger. So remember, we forex traders, we don't actually, how can I say this? We don't know exactly where the market is going. All we do is anticipating. Okay, so that's why you have seen that people have came up with robots, people have came up with indicators, people have came up, people are buying signals. Okay, people are buying signals using indicators, some are using robots. Why is it that way? It is all because people want to, it is all because people, all they want, what they only need is when should I enter and when should I exit. So indicators will help you to know when to enter and when to exit. Signals, someone giving you signals will help you to know when you should buy and when you should move out. Okay, if you use robots, EAs, expert advisors will help you to know when to enter and when to move out. So also, if you want to approach technical analysis, you have to break it into different portions. Okay, portion number one, you have to identify area for buyers and sellers. Number two, your exit level and your entry your entry level. Okay, number three, your account size. And account size, that's the actual, you can bracket it as, let me put it here, we can bracket it as risk management. Can bracket it as risk management. So meaning these are the three things you need when approaching your technical analysis. Okay. So if you're going to approach your technical analysis, you need to know the area for buyers and sellers, because uh, those are the two entities in the forex market. They will either be a buyer or a seller. After knowing where they stand, the buyers or where the sellers are standing, then you will know when should I enter. Okay, so and when should I move out? So after knowing when you should enter and when you should move out, then you have to ask yourself, how much am I risking? That's the bracket of risk management. So on the line of buyers, okay, on the line of, if we go to this portion of buyers and sellers, if you go in this portion of buyers and sellers, you will be, actually, the way we are going to see this, the way you should see this, or the way you should identify buyers and sellers, depends, it varies on different strategies. Okay, but most of you, let's say the buyers, you have represented buyers with a resistance level. When I say buyers, that's a resistance level. What forms a resistance level? So of course the buyers. Okay, and also when I say sellers, that's a support level. Okay, so that's how you people have categorized it. Okay, so if we are to locate buyers and sellers, we can use different strategies. Many of you use support and resistance. Many of you use support and resistance. Support and resistance. I don't know if the SP is that one, but we can move on with that. Okay, support and resistance. Others can use, people these days, they use ICT as a strategy to locate when to buy and when to sell. Others use SMC, smart money concept, live around smart money concept. Others uh, use supply and demand, supply and demand. So all of these we can call it ideologies. Okay, all these are just concepts, but at the end, you are aiming for one thing: when to buy, when to sell. Okay, because all of these are just methods, just concepts. But you will find that someone using support and resistance, for example, if I do the gold analysis and I want to buy at a certain level on gold, if I use someone who uses support and resistance, if he uses support and resistance to find a certain price to sell for on gold, even the one of ICT will use the same concept. The one of SMC will use the same what? The same concept. The one on supply, the one, okay. So the one of supply and demand will also find the same area. So meaning you find that we have all, for example, today, let's use today. Someone is analyzing, if we all decided to analyze CPI, okay, you find that some people will have said, yes, we are selling the USD JPY. Okay, someone will be like, we are selling USD JPY. So if we are selling USD JPY, I'm using support and resistance level. You will find that another person is using ICT, another one is using SMC, but we have all concluded that we are selling USD JPY. So that's a concept. Okay, at the end we have the same what entry level. So what these concepts do? They just boost your what? They just boost your confidence. But trust me, I always tell people that every strategy is, I always tell people that every strategy is profitable. Every strategy, whatever strategy you know, can be profitable. But what makes the difference is this risk management area. Okay, but we shall see that. So what the most important thing for ICT, for SMC, for support and resistance, supply and demand, is to give you that confidence to know when you buy and when you sell. Okay, that's confidence built with these all models. Okay, so those are some, I have mentioned a few. Okay, so let's do some analysis using my own strategy. I call it the impulsive strategy, but let's go deep into it, what it means and what it is. So, personally, I believe, personally, I believe that the market moves in two ways. The market will consolidate, the market will consolidate, or it will expand. Okay, so instead of consolidation, you can use, it can correlate. Okay, the market can correlate or expand. So expand, you can call it impulsive. Okay, so the market will either consolidate, we have been seeing this normal, it has been normal always. Okay, that the market will either, let me use this. Okay, so the market will either consolidate, as you are seeing here, like this, then it will expand. That's how it moves, day in, day out. Okay, so since for us, forex traders, or we traders, retail traders, all we do is anticipate. Okay, so such a market movement helps you to anticipate, to know when to enter and when to move. So whenever you see a consolidation, okay, it means there is a battle between two entities. either buyers and sellers. This is where the word liquidity comes in. Okay, this is where the word liquidity comes in. Many of you already talk about liquidity, but this is where liquidity comes in. That whenever you see a consolidation, we are having buyers, sellers, buyers, sellers, buyers, sellers. So it's a battle between two people. So if I try to dig deep into such a condition, it shows that, let's say, let me use this as an example. uh, if we want to, let's say we want to buy gold. Okay, if we want to buy gold, we are investors, me and you and maybe even other four people. We want to buy gold. Okay, so let's say I have $100. If I invest my $100 in gold, I buy it, the move will happen that someone else has invested $100. But after investing $100 in two buys, then another person will deposit, will invest in $110. Okay, it means they are going to go below my entry, my entry level. Yeah, as we are doing 110, another one will come in with $90. We are buying with $90, meaning we are going to have another push. Another one comes in with, let's say, is selling with $80. So meaning we are almost within the range of $100. So as we are in the range of $100, then someone comes in with big money. Someone comes in, we have been ranging within $100, but then someone comes in with big money, let's say $500. If we buys, of course, we are going to see a breakthrough. Okay, remember we have been this range in a line of $100. I buy with 100, someone sells with 110. After someone selling with 110, another one is buying with 120. Then the market goes back. Then another one comes in with a sale of $90. Another one comes in with a, so it keeps consolidating. So me as a forex trader, me as W.C.K, I don't exactly know who has the potential to win this battle. Okay, so but I don't know who has the potential to win this battle, but I want to be involved in that business. Okay, I don't want to miss out. I want to make money from that battle. Okay, so how am I going to know the winner? Okay, so the only way I'm going to know the winner is this expansion here. Okay, so this expansion here. So as soon as the expansion moves out of this consolidation, okay, let's say this is the consolidation here. This was the zone. Okay, this was the zone as the market was between the two orange lines. So the market was moving within consolidation. Some buying, some selling, some buying, some selling. So that's a battle I'm watching. So I always tell people that always avoid the consolidating markets. Okay? The reason why I'm telling you to avoid the consolidating markets is because you can't tell, are we buying or we are selling? Okay, so how am I going to know that now I'm buying or selling? As soon as I see that bullish expansion, a bullish expansion, or you can call it an impulsive move, a bullish impulsive move, it, it indicates that this area now has been conquered by the buyers. Okay, because some were buying, others were selling, not until someone came in with big money, and then we have experienced what? An expansion. So seeing this expansion as an anticipator, I now know that yes, the buyers are here. So since I know that this is a bullish trend, what is my next step? So after knowing it is a bullish trend, my next step will be looking for entries. Okay, we'll be looking for entries. It brings us back to here, knowing buyers and sellers. Okay, buyers, these are the three components we are following. Knowing where buyers and sellers are. After knowing where buyers and sellers are, now we look for the entries. Okay, so I think now, before we go on looking at the entries, I think now you know. I think now you can actually see that the expansion was what? The expansion has happened, and the reason for the expansion I have explained it to you, and the reason for the consolidation I have broken it down for you. So now you know why the consolidation is there, and also now we know why the expansion has came in. So this expansion means that the buyers have won. Okay, so as W.C.K, a tail trader from Kampala, now I know that this trend is bullish. Okay, so since I know that this trend is bullish, my next step will be what? Yes, I know it is buying. Now I want to join the buyers. So in the line of joining buyers, that's when I'm going to look for my what? My entries. So this is the issue now. Now I know the buyers are here. The tricky question is, when am I going to buy? Okay, so I have already told you guys about the normal investors knowledge. Okay, you can't sell, you can't sell at a lower price. Okay, you only sell at a lower, so you sell at a higher price. Okay, higher price. You buy at a higher, at a lower, buy at a lower price. Okay, buy at a lower price. So meaning now this is the real price. Let's say this is now gold. Let's say we are analyzing the expansion has done what has happened. So after this expansion happening, my entry level, here comes in the word that you guys, you always say, you always talk about the liquidity. Okay, so I know the buyers are here, but as WCK, I don't have the money to buy at this high price. Okay, as the, let's say the candle has closed here where this arrow stops. I don't have the money to buy at this what? Buy at this point. Okay, because I am low at liquidity. I don't have that money to buy at this price. Okay, why do I say I don't have this money? It is because I have to look at my exit areas. The exit areas, that's the stop loss and take profit. Let's focus here on the stop loss. If I exit from here, when the candle has just expanded, where am I going to hide my stop loss? The possible area to hide my stop loss, it has to be down here. It has to be down here. Okay, I only have to hide my stop loss behind this support level. That's the easy, that's actually the closest zone near my entry. So if you do the math, calculating all the pips from this level here, okay, if you calculate the pips from the entry level here, let's say this was your entry level, okay, if you calculate the, if you calculate that level, this level, calculate this level, if I enter my, if I put my money here, if I start buying from here, this stop loss is too big to put my stop loss. This is very big stop loss. So meaning this is an expensive trade. I can't take it. Okay. So meaning the only time I'm going to buy is when the market is, when the market is close to my what? When the market is close to my stop loss, or let's say the closest zone. Okay, so if the market comes close to the nearest zone, that's when I'm going to put my entry. And also knowing that this range here was a battle between buyers and sellers, but the buyers won this battle. This indicates that we have buyers at this what? At this point. Okay, so meaning that only area to support me, to push me, to give me that strong muscle of liquidity, it's when I buy at this zone here. Okay, so buying at this zone here indicates that yes, my money is being backed up with the buyers here, because these buyers won. Instead of buying from here, and the people who can back up my small money with my 0.01 lot, they are here. I can't put a stop loss up to here. If I put the stop loss up to here, my account can't hold. I'll be blowing this one. I'll be blowing this account. So if I look at such an approach, meaning I'm only going to buy from this point. So meaning I'll be waiting. This is a, I can we can name it as a buy area. Okay, we can name it as a buy area, or this zone. Okay, this is a buy area. So meaning I know why is it a buy area, because there are buyers here. I have explained to you why we think buyers are here. So meaning the only time I'm going to be buying is when the market touches this point. Then from here I'll buy the next level where buyers are or sellers are. Let me hope you guys these things are clear. Now Uh, this is a bullish setup. Okay, the analysis, the model I have done for you, it is for a bullish what? A bullish setup. But this is the same thing which also happens on the what? On the sellers. Okay, on the sellers. If you on the line of sellers, this is the same thing which does what? Which happens. So we can start. Let's do some simple look here, some analysis here, and see the model, the bullish setup. How can you analyze? How can you break down such a setup using the same concept that I've took? So, so this is how we are going to start our analysis. This is how we start our analysis. You start by, let's use the 1 hour. Let's use the 1 hour. Right? Let me use a different pair. Let me use GBP. GBP. GBP JPY. So let's see. This is the GBP JPY. So let's use the same concept and try to break down. Let's use the same concept and see how we can try to break down using the same concept. So remember, we said first step to approach your technical analysis, identify. Moment. Okay, I've been saying the first step, as we say, the first step to identify. Okay, so the first step is to identify buyers and sellers. How are we going to identify the buyers and sellers? This is simply by identifying areas of expansion. Okay, so let's go on the previous to see how it was reacting. So we can see we had this expansion here. Okay, this was an expansion. Okay, also we had an expansion here. Okay, so also we had an expansion here. So most of you guys, those who trade ICT, SMC, you always name this as FVG. So as I told you, these are concepts. Okay, concepts. The only thing they are giving you is the confidence to approach the technical analysis to help you know when to buy and when to sell. That's what concepts do. So, but at the end, if you put me in a different corner with my own strategy, you put my brother Praise FX in the corner, you put my brother Shiz FX, Shiz 19 in the corner, you bring out my brother Mustafa, you put them in different corners, and you give us trading view to analyze gold. Mustafa is using a different strategy, Praise using a different strategy, me using a different strategy as well, and also she's using a different strategy. Trust me, you might find that we all have the same entry. That brings you back to the strategies we all feel attached to. Okay, that those are ideologies. Okay, those are ideologies. The most important part here is the entry level. Know the entry level, know the exit level, then approach your risk management with a proper manner and good discipline. But using the same concept, because I have done for you a model of the concept we are using now. So we have identified these areas of expansion, or the impulsive moves, also impulsive move, also impulsive move. But you see that what I want you guys to see here, what I want you to focus on, you see that where this area stops, the expansion stops. Where the expansion stops, the market has been turning from there. Okay? Why is it turning from there? It takes you back to what I explained to you earlier. That the only reason this market is turning from here, it is because we, me and you, and even other retail traders, we are just following up. We are just anticipating. We were just anticipating. Okay? We were just anticipating what's going to happen. But we had this consolidation. You see this consolidation here? So after this consolidation, the market gave us a bullish what? A bullish move. As I explained to you, as soon as you see a bullish move, it indicates that this area of consolidation, it is an area of strong what? Strong buyers. So meaning I don't have the money, I don't have the liquidity, I don't have enough backup to buy from this point. Okay, you couldn't buy from this point because your stop loss has to be behind this what? This impulsive move. But since you don't have that liquidity, you have to wait for the market to come back and retest this area. After retesting this area, this is when you execute your entry and you put your stop loss behind. For example, you execute your entry there, you put your stop loss behind the what? Behind the expansion area. Okay, so why are you doing this? Because you identified that this is an area with strong what? Strong buyers. So then you buy from this what? This area, the market buys your stop loss. You have risked almost a small, let's say a small pips. You have risked small pips, and then you have still made some strong what? Some strong gains. Okay, so you see that this has been happening. Also, if you come and see another expansion here, you see this expansion. Okay, so you see this expansion here. Also, the market bought after this strong consolidation they had. After this consolidation they had here, okay, then they had to buy. They had, okay. As soon as they bought, of course, it had to come in your mind to know that yes, this is an area of buyers. So the only time I have to buy, to strongly buy, is when the market comes back to test this what? This area. Why am I buying from here? First of all, I'm not going to use a lot of money because I have an area to hide my stop loss. The stop loss and the take profit are very important. Most of you always focus only on the stop loss, but the take profit is also what? Important. Okay, so we are still focused on the end. So why am I entering from here? This consolidation here was a strong one. Remember, this is a 4-hour chart. The consolidation was there. They formed this candle here. So after forming this small candle here, then they had to break through. So a breakthrough was an indicator that buyers have won the battle. So after buyers win the battle, what next for me? My next move is to look for an entry for buyers. I have to look for an area which is close to a strong support level or close to the buyer's area. Okay, so as soon as they break through that consolidation, the entire consolidation becomes an area for buyers. So meaning I'm only buying when other buyers are buying. So meaning I only have to be close to them because I'm a retail trader. I don't have enough money to hold trades on 4-hour or what. I don't have that money. Okay, so meaning that's the only reason why I'm going to buy from here. So you see, as soon as the market touched here, we had to buy strongly. That's the entry level. Okay, so this same concept can also work to the sellers. Okay, this same concept can also work to the sellers. So as you see, your biggest focus, let's say if you are using my concept, your biggest focus should always be on those impulsive moves. Okay, impulsive moves help us retail traders to know that yes, now buyers are in. Okay, so you see a strong bullish candle and you are trying to sell. Why? Don't sell. Wait for a retracement, join it. Okay, how are you going to join it? You can use this concept I'm teaching you right now. You can use the ICT concept. It's a good concept, but in ICT, to make things easy for you, if you are using ICT, it would be good if you focus on the fair value gaps. Okay, so then if you use the pivot, I don't know if you guys, some of the pivot point strategy, you don't know it. Also, you can use supply and demand. The supply and the demand, you can focus on those demand areas and supply areas. Those are areas of buyers and sellers. Okay, just that for us, we normalize naming those things, but there is a big information behind it. Always remember that these candles, it is a group of information. It's information collected. Okay. Yeah. So I think I have explained to you this concept on the bullish side. But it is, as I have told you, it is the same concept you can use on the what? On the seller's side. Okay. So let's, now we have seen the entry. We have understood how the entry comes in, how we do enter our trades. Now, how do we move out of the trade? Okay. How do we move out of the what? The trade. So let's first go back to the chart, our where our work is, DXY. DXY, this is where our work is. So now I know the entry. I know how I can enter using this concept. I know how I can buy. Okay. So after knowing how I can buy, the next question is if I know how I can buy, I know how I buy. Now, where do I put my stop loss? Where do I put my take profit? So it's not a matter of cramming it that my take profit has to be here, my stop loss has to be there. The ideology you are using or the strategy you are using, since I have told you it is a catalyst, it is something which is going to give you confidence when you are trading. You should always try hard to deep down, to dig deep why you are doing something. Okay. So now for me here, as I have went deep on why we buy using this same concept of the then let's understand, let's dig deep and understand why why we put our take profit in a certain levels. Where should we put our stop loss? Why are we putting our stop loss there? Why are we putting our take profit there? So remember, let's come up with a small model here. Okay, this is the model. We had a consolidation here, then we had an expansion here. So remember, after expanding, it has left, yeah, it has informed me that yes, we have buyers coming in. Okay, so it will also do some consolidation, like a smaller consolidation. If it retraces, it can come retracing as it is coming down. After reaching this point here, then remember, this is where I'm buying from because this is my zone. Okay, this is my zone for buyers. So now I'm buying. Okay, so if I'm buying from here, okay, so this is the model. Let me draw the zone for you. We had that. This was our zone. We had a consolidation here. Buyers trying to fight sellers, and for example, whenever you see Euro USD, it means euro versus USD. Okay, it's a battle. It's a battle who has more value. It is always a battle, and it has always been a battle. Okay, so under this concept, once you see this consolidation here, as we said, this was a consolidation. After consolidation, buyers came in with a lot of money or liquidity, then they bought. Okay, so after buying, they made a consolidation here. They started selling slowly to come back and fill this zone here, touch this zone to pick the momentum from here. So as a day trader, even if you're not a day trader, even if you want to trade long term, now you know that this is my entry. Okay, you bought from this area here. Okay, so this is where you bought from. So your buys came here. This is where you bought from. So after buying from this level, okay, remember already there was a battle, meaning sellers failed to break through this. Okay, so I have two areas where I can put my stop loss here. Okay, one, this is the weakest area to put my stop loss. The weakest area to put my stop loss will be behind this zone. Okay, it will be behind this zone. That's the weakest area I can put my what? My stop loss. The strongest area I can put my stop loss, it can be behind the entire what? The entire zone here. So SL can bracket it and name it week. Okay, so I can put my SL here. You can put it even between the zone or between the consolidation, in the middle of the consolidation, like here. You can put in the middle of the consolidation. It is weak. It is a weak stop loss. Also, we have a strong stop loss, SL, strong loss, strong stop loss. It is strong. Okay. So whatever you have in your concept, you have to be in position to explain it. This is not a matter of going and watching W.C.K trade move and you just copy and paste and you don't know the concept behind it. The more you don't follow up on the concepts of the ideologies you are using, like ICT, like SMC, you keep on failing. You keep on seeing things don't working out for you. So why is this a weak stop loss? And why is this a strong stop loss? The one in between is a weak stop loss. Reason being, the market can come, though I can expect it to turn from this point here, and it doesn't. Okay, it doesn't. It comes, it stops here, then it touches into this area here, then it buys from this point. So meaning this, there is a possibility that once they touch here, it is a weak stop loss, they can kick me out and then they proceed with buying. Okay, but this strong zone, this strong stop loss, why do I say it is a strong stop loss? If the market comes when I expect to buy from here, I execute my buy and I put my stop loss behind. Once this stop loss is hit, okay, it means, remember we had a battle previously of buyers and sellers, meaning buyers won, not so, and buyers were buying, the buys took one. Then sellers started pushing down so that they come and pick up this momentum and they go with this momentum. But sellers have come with a strong momentum, breaking all this zone, hitting the middle stop loss or the weak stop loss, even breaking the entire zone. As soon as the market closes below this entire zone, this indicates that sellers have come back. This indicates that sellers have come back. So what would be my approach? My approach would be waiting for them to retest this same zone. After testing this same zone, then I can sell with them. Okay, so you can see the beauty of this impulsive strategy, that you are not so stuck, because this is not a game of cramming, that we are going to cram something or we are going to be attached to a trend that for me I'm a bullish, I'm a seller or what. No, I can change depending on the market conditions. Okay, I have been looking for buys, but according to what I have seen, okay, I've been looking for buys. According to what I have seen, they have came back and broke through the entire zone. Breaking through the entire zone, it indicates now the buyers have been won. Now we are joining the bearish trend. So all I have to do is this turn, wait for the breakthrough, then I retest, then I sell with it. Okay, so selling, I still use the same stop loss approach. Okay, so meaning I'll just change this stop loss. If I'm to sell, I take it back. Okay, this one remains the weak stop loss, this one becomes the, so that's if I sell from here. So if I sell from here, this becomes the weak stop loss, my strong stop loss becomes there, goes to the back side. So I think now you have seen why we put the stop loss in such areas. We don't use stop losses to protect money. Actually, you guys should know this. We don't use stop losses. The main role of a stop loss, yes, it can protect your money, but the main role for the stop loss is to, how can I say, it's to lock yourself. Know that this is, once the market reaches this point, there is no turn back. So just take the loss and I move on. Okay? Because actually, let me first dive a little bit in the orders. Okay? You people, whenever you see, I don't know what comes to your mind when you see a stop loss, when you see a stop loss, okay, when you see pending orders, okay, pending orders. So you people, you just from these things, you be like, no, I have put my pending order, I've put my stop loss. So once you understand the concept behind stop loss, take profit, uh, stop loss, take profit, pending orders, the concept behind this, it will dive you, it will take you deep into the broker. Okay, a broker like Tamam. When someone says Tamam brokerage service is a broker, what do you understand by a broker? A broker is always a middleman. A broker is a middleman between you and the markets. Okay? A broker connects you to the market. But you'll find that also the broker will have to go through a certain liquidity provider. A liquidity provider will take you to the markets, the live markets. Okay? But let's focus on the broker. Because these stop losses, pending orders, all work with the broker. When I put on a stop loss, it is an indication that it's an order, because as you hear the word a broker works for me, okay? A broker works for me. I give him orders. For example, if I want to buy land, okay? Yeah, let's use land. If I want to buy land in a certain area, you find that those areas have brokers. Those areas, people will be like, if you want land, well, so and so is a broker. Okay, so if I meet that broker, I'm going to give that broker orders. These are going to be my orders. I want 1 acre in this area at this price. That's an order. So this broker is going to take in my order, look for the land of 1 acre in the area I told him, and in line of that price I have. So the brokers just executed my what? My order. That's the same thing which happens with the Tamam brokerage service or with the brokers, the forex brokers. If I put on a stop loss, I have ordered this broker that once they reach this price, I can't hold anymore. Just cut the losses and let the market go. So, meaning, if I find out that the broker, if you go to those developed countries, if I give a broker an order and the broker doesn't take in that order, there is a way I can sue that broker. Just that for us, most of the people in developing countries, we are used to trading. We are used to trading $100, trading 10,000 US dollars, 100K, 100K thousand US dollars. That's what we are used. But you find in developed countries, those people who take trading serious, people who are trading millions of dollars, is having a stop loss worth $1 million. Okay, so this guy is going to give a broker an order that, excuse me, bro, if I'm away, Mr. Tama, even if I'm away, even if I'm offline, once the market reaches this price, kindly cut off the trade. Take that loss, leave it to go. Okay, so if Mr. Tamam doesn't execute that stop loss, I can sue him. In developed countries, you can follow up on that and you can get justice, because a broker, I gave him a stop loss, he didn't take it in, and now I suffered a loss. That's an order. Okay, so even the same on pending orders, I can say, for example, this can be, let's say I'm a farmer, okay, I'm a farmer, even if, yeah, let's say I'm a farmer, let's say, I always use maize, okay, so if someone is dealing in maize, someone is dealing, let's say, in watermelons, someone is selling watermelons or buying watermelons, is dealing in watermelons. So if you are dealing in watermelons, you want to sell them at a certain price, but the market, the price at the market is still low. You get, the price is still low. So what I'm going to do, I'm going to give my broker an order that even if I'm away, even if I'm not at the farm, but you find someone who is buying at, let's say, a kilogram of maize is buying it at $500, just sell, even if what? Even if I'm not there. Okay, so that's a pending order. So if my broker is moving within the town, within the colleagues, and someone is willing to pay that money, is just going to take him to the farm, even if I'm not there, and the order will be taken. So that's the same here in trade. So if I have a pending order, like I have a buy limit, it's like I'm telling this broker that if the price reaches at that level, buy from there. So meaning I expect him to execute my buy. Okay? I expect him to execute my what? My buy. So even if I'm off, that's how the do. So this will take you to the concept to understand that this is a real business. This is a concept. Forex trading is a business made up with real entities, real money and real business mind. Okay, so whenever you see a broker, whenever you are putting your stop loss, put it in that mind. So taking us back on the other thing, a stop loss, that's why you have seen that I have two stop losses. I have the one, so each stop loss indicates a re-entry. So if my stop loss is hit here, meaning my next re-entry will be this zone and my stop loss will be. Okay, so why am I putting those stop losses? I'm not putting those stop losses to tell me that I know protect my account is going to blow. Just that we made blowing to be normal. But that stop loss is an indication that once the price reaches this level, it means the trend has. That's the main reason for stop loss. So if the price reaches this level, now I'm giving an order to my broker. I have made my analysis, I'm going to sell. So I'm telling my broker that if the price reaches this level, cut off the loss. Why am I telling him to cut off the loss? Because personally, I believe if the market catches that price, the trend has already what? Changed. You get? So that's the concept behind the stop loss. So the stop loss is not necessarily based on money, but it is more based on the change in the trend. Okay, so when the trend changes, the stop loss is moved out, then you look for other entries. As you have seen, we did the concept of buys here. After trying to buy from here, the market refused, came breaking through this point, hitting all our stop losses. After hitting all our stop losses, then we change to sell. Okay, so that's the concept, guys. That's the concept behind it. So I don't want to go more. I don't want to proceed more. The other concept. Right? So allow me to stop here, guys. But at least I have took you through this concept. So we have many concepts. You should know that we have many concepts. We have the support and concept. We have the ICT, SMC, supply and demand, the impulsive strategy. Before you call them strategies, but those are concepts. And their only role for all those concepts you see to help you identify when you are buying and when you are selling, where you put your stop loss, where you put your take profit. But the main guy, because of time, I got a chance to take you through this risk management part. But if you are interested in this concept, the impulsive strategy, you can reach out to me specifically. So before I go, I know I have seen we have a good turn up tonight. So what I want to tell you guys is try hard to actually you should try our services at service. Try TBS services. We have 100% bonus. Then also we have the one going for those people outside Uganda, people from South Sudan, Kenya. We have a bonus going on for you people. You can come and try it out. It's a very good bonus. If you can't reach out to the support, you can reach out to me. I'll take you through that. Then the 100% bonus, it is there. When you deposit your $100, you're going to be given 100% bonus. That's $200 on your equity. Okay, it will be reflecting even on your what, in your equity. So the spreads are good. I've been always posting with you guys, showing you our entry, showing you our spreads, how these spreads look like. Okay, I've been always taking you through this. So try out TBS. Try out TBS. The withdrawals you have seen, some you have already seen our withdrawals because you are guaranteed to your payment. Okay, you receive your payment as soon as you request it. Okay, so Now TBS is also organizing for you these online classes. TBS is organizing for you the CPI trades. I have seen. Actually, I have not got time to break for you guys CPI, but uh, just that you people, you know that the concept of trading fundamentals is always about winning. No, 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 no. It should always be about the approach. But TBS keeps on organizing all of this. Those of you who have reached out to me, Praise, and other traders we do work with, Shiz and Mustafa, you have seen how expensive just to teach you, just to consult. But TBS makes this consistency, always bringing traders every Thursday to teach you, every fundamentals traders to teach you, you know. So I would kindly, even me personally, right now, I use with service. If you have been following up on me, see the brokerage I'm using. So it is Tamam what? Tamam brokerage service. So I would also suggest you guys should try it out. Deposit at least $100 and see how it is, because I know change is always difficult to happen. We are humans. Change is not something we always like, but try it. Try depositing on Tamam. Try putting in some trades and see how they are. We have a bonus. Yeah, come and check it out using a bonus. Okay, so allow me to stop here. If you are interested in my concept, the impulsive strategy, you can reach out to me. I'll teach you how it is. Okay, I'll teach you how it is at a certain fee. That's why I'm saying that you should come up. People are paying money for this. Okay, so allow me guys to stop here. Someone is asking WCK, give us a recap of some trades you took this week. The trades I took this week, just that we are bad at time, but the trades I took this week, I have been having USD JPY, took USD JPY on Monday, GBP JPY, and actually that impact you have seen, I think I have posted my trade. I think you have seen the trade I posted in my Telegram channel and also my status. That's not a trade for CPI. I didn't trade CPI specifically. I gave out a signal, but I didn't take it. So that was a trade taken on Monday. You should utilize trading long term. So this concept of mine will help you trade long term. Right? So it can help you trade long term. So mostly, even on the NFP, you guys who follow me, you saw that the time you came to do analysis of NFP, for me, I already had entries. So it's long term. It is long term analysis. So you should utilize analyzing long term. I'm sorry, my friend, then I can't. It's because of time, but we are still together. Okay, Thursdays lessons are always there. Just keep on tuned. So allow me to stop here, guys. Have a good night. Thanks for being part of this. If you have any issues with the membership service, you can even reach out to me personally. My numbers are public. Anyone can message me and can text me. So have a good night.